Good morning. This is your chief analyst. On this Wednesday, we look at global capital flows, technological disruptions, and harsh realities of industrial policy. The gap between software billions and the hardware crisis is widening today more than ever. Let's dive straight into the data. 1. Top headlines and industry news. Let us start with a massive strategic shakeup in the Asian financial markets. The Chinese company Momenta, a leading developer of autonomous driving, has achieved a spectacular initial public offering in Hong Kong. The real highlight here, the startup is backed significantly by General Motors. This strategic move injected an impressive $752 million into Momenta's coffers. It is crystal clear proof that global alliances between legacy U.S. automakers and Chinese AI disruptors continue to thrive when it comes to the race for the fully autonomous vehicle. At the same time, we receive a drastic but unfortunately symptomatic update from Germany. Another major automotive supplier has announced the permanent closure of a production plant in Germany. Ongoing cost pressures, high energy prices, and the sluggish transition to pure electromobility have claimed the next victim in the physical supply chain. Despite these local setbacks, the macroeconomy is paradoxically showing resilience. Although global automotive sales fell by 2.7% in the first half of 2026, the outlook for mergers and acquisitions and strategic realignments in the industry remains highly optimistic. The consolidation wave has only just begun. 2. Vehicle and technology check. Moving on to technology, Mercedes-Benz is currently launching a massive offensive in internal digitalization. Today, the Stuttgart-based automaker detailed how they are scaling AI-powered automation across the entire corporate structure. This aligns with a global macro trend that analysts call AI-powered luxury manufacturing. Mercedes is using data-driven models not only within the vehicle itself, but is also integrating artificial intelligence deep into production and administrative processes to withstand immense global margin pressure. A highly critical topic for all global OEMs is brought to the table today by tech giant Mobileye. The company has published a comprehensive briefing on the new ADAS regulations coming into effect worldwide. From new UN standards in Europe to tightened mandates in Asia, anyone who fails to meet the latest sensor and software compliance rules will simply lose global road approval for their fleets moving forward. In the realm of digital vehicle premieres, we are also seeing an exciting trend. The release of the car list for the upcoming video game Forza Horizon 6 is increasingly being used by manufacturers as a virtual showroom to present prototypes and upcoming production vehicles to a young, new audience before they ever hit real roads. 3. Market trends and strategy. Consumer behavior is changing radically right now due to the integration of artificial intelligence. A new industry report shows that half of American car buyers have strictly capped their budget at under $45,000. To find any viable vehicles in this price segment, consumers are heavily utilizing AI tools to compare leasing rates, total cost of ownership, and residual values. The affordability crisis is forcing customers into digital empowerment. In the automotive aftermarket, we see a similar efficiency boost. Vehicle customizers and restylers are using AI-powered software to optimize profit margins and workflows for accessory installations and premium detailing services, a market segment that is currently experiencing explosive growth. At the same time, major auto dealership groups are preparing for earnings season. Group 1 Automotive, one of the largest retailers in the US and the UK, announced the upcoming release of its second quarter financial results today, which will soon provide us with an unvarnished look at margins in direct sales. 4. Policy and environment. Regulation and location factors. On the geopolitical stage, a tangible trade conflict is manifesting. The electric vehicle brand Polestar, which belongs to Volvo and the Chinese Geely Group, will de facto no longer sell new cars in the United States. This is a direct consequence of escalating tariffs and U.S. regulations aimed at vehicles with Chinese hardware or software systems. This highlights a strategic report being debated again today. The urgently needed reverse tech transfer, importing superior Chinese EV technology into the U.S. to salvage local heritage brands, is being heavily blocked for purely political reasons. The fronts between Washington and Beijing are hardening, further fragmenting global supply chains. 5. My personal focus. Spotlight on Germany. This July 15th is a day of tough reflection for Germany as an industrial location. We must connect the dots between the events in Hong Kong, Stuttgart, and the supplier heartlands. Here are my 3 key takeaways for the German industry. First, the slow death of hardware suppliers. Today's news about the closure of another German supplier factory must not leave us numb. It is a structural alarm signal. Companies like Bosch, ZF, or Continental are caught in a cost trap. While manufacturing traditional metal and plastic components is no longer profitable in Germany, they often lack the billions needed to fully execute the transition to software at the same time. We are witnessing a historic deindustrialization across Tier 1 and Tier 2 ranks. Only those who aggressively divest unprofitable divisions and reinvent themselves as pure tech and systems integrators will survive by 2030. Second, Mercedes is doing it right. AI over ego. The fact that Mercedes-Benz is aggressively scaling internal AI automation is strategically essential. Many German OEMs have spent the last few years trying to build their own clunky operating systems instead of streamlining their core processes, R&D, purchasing, and manufacturing. Mercedes understands that AI-powered manufacturing is the only way to offset the immense wage and energy costs in Europe. When algorithms steer the supply chain and program robots more efficiently, it is still possible to generate healthy margins in high-wage countries. Third, Momenta's IPO lesson for Volkswagen and BMW. Momenta's public listing in Hong Kong, backed by General Motors, brutally illustrates how global power politics works today. GM buys its way into autonomous driving expertise through strategic investments in Asia. Where are the corresponding multi-billion-dollar investments from German OEMs and highly disruptive global tech IPOs? German manufacturers must be careful not to fall behind in the race for Level 4 and Level 5 autonomy. Partnerships like Volkswagen's alliance with XPeng are a good start, but we need a much more aggressive M&A strategy in Asia and America to secure access to cutting-edge AI. 6. Outlook. To conclude today's analysis, we are seeing a two-speed industry. Hundreds of millions are being funneled into AI and software in Asia and on US stock exchanges, while legacy factories are shutting down in Europe. Regulations, as we see with Mobileye and Polestar, are increasingly being weaponized. To survive in this climate, companies must relentlessly outsource or automate hardware and inject every single dollar into software alliances. See you tomorrow in the cockpit.